Cut, pause. That seems to be what we got from Powell. Is he done for the rest of the year?
Oh, yeah. There's only one more meeting, December 10th and 11th, I think it is. I think they're done. And the question is whether they need to move in January, at the end of January when they meet. I think the odds are slim right now, but I think the market has fully discounted this. The so-called neutral rate is below the rate of inflation, and I think they've built in a little protection for a possible slowdown, although right now the employment numbers, the payroll numbers, and the PMIs are pretty positive, or at least they seem to have bottomed out or turned a little bit positive. So as long as the consumer keeps spending money, we're in pretty good shape here in the United States.
So if you were around the table, that's the sort of your narrative that you would share if they went around and said, how do you see things moving forward? Your view would be things have bottomed from certainly the manufacturing side of the economy, which has been where the real weakness has existed.
Well, I think the manufacturing economy has been in a bit of a recession here, but remember the formula, C plus I plus G plus or minus X. Consumption is over 70% of what drives our economy. Services drive our economy rather than manufacturing. And that's been fairly robust. I'm really on Lee Cooperman's plane here. I think he's got a good point. And I'm also, I don't disagree with Paul Tudor Jones. It depends on how people feel about the overall political environment. If the senator from Massachusetts looks like she's going to win the presidential race, I think you have a lot of downside. If the president gets reelected or we have reasonable policy going forward, then I still think there's a bit of upside, even though marks are very pricey right now.
Okay, you went there, so we're going to go there now, I suppose. On both.
I know where you're going.
You went there. I'm just following your lead. Okay? I'm going there. So Paul Tudor Jones was speaking. We'll get to Cooperman in a second. Paul Tudor Jones speaking today at the Greenwich Economic Forum says Elizabeth Warren elected, S&P would trade around 2250. That's a long way down from
25%, right? Yeah.
So you agree with that?
Well, of course, it depends on what policy she actually follows through with. I know her. I was an overseer at Harvard for 6 years, the equivalent roughly of a trustee. I was the interlocutor with her when I was at the Fed on Too Big to Fail. She's a very good contracts lawyer. She actually read Dodd-Frank, which neither Dodd nor Frank appeared to have done. So she was a good interlocutor. But these policies she's advocating are just not affordable. And the way she's attacking people like Lee Cooperman, who you just mentioned, who happens to be a friend of mine, I think is excessive and a little bit frightening even for those of us that don't have the kind of wealth that these people have been able to accumulate through their brains. So I think it would send a shiver up the spine of the economy if she were elected.
You saw the letter that Lee sent to her? Is that right?
I did. And by the way, just so you know, I'm not as wealthy as Lee. I haven't been that successful financially, but I've done well. My parents are immigrants. They came here in 1939. Attacking people who have done it on their own, who came from nowhere, children of immigrants who have been successful, I think is a very sad argument for someone to make who's campaigning for office. People like Lee Cooperman or little guys like me or those that have just worked by the sweat of their brow to come from nowhere are what make this country great. And I think Lee should be applauded rather than attacked.
Let's listen to one thing that Lee told us yesterday about a principal position of Senator Warren's, and we can react on the other side further.
Sure.
The wealth tax is a bankrupt concept. There are 14 or so nations that have tried it, and they've dropped it. I mean, it's a nightmare. For 50 years, we've been promised simplification by the IRS. This would be a nightmare. It would be a nightmare. Every year, you're going to calculate your net worth, and then you're going to give 2% of your net worth to the government. It's ridiculous.
You say what?
I don't know how you calculate your net worth, particularly if you're invested in anything that moves in price. And then I think the other aspect, which Lee did not mention, that is, does this drift downward into lower so-called high net worth brackets? Once you start down this path, I don't know where it stops. So I think it sends a shiver up the spine of anybody who's worked hard, accumulated savings, become a millionaire rather than a billionaire. The question is, where does it stop? And once you get that kind of drug into your system from a fiscal policy standpoint, I don't know where you stop.
Wow,
so
man,
I think that would be a confidence shaker.
For a minute there, I thought you were describing monetary policy. It sure
You
sounded
know how
that
I
way.
feel about monetary policy. I think
Once
we've
you
been
get the drug
extremely
into your system,
accommodative.
once you get the drug into your system, where do you stop?
Well, you know, I said at the table when I was there, if we keep this process after QE and we keep rates artificially suppressed for a long time, it's like feeding a child opiates. And it's very hard to get them off of it without creating behavioral disorders. So I think the Fed now has reached a better position. But this business of fiscal policy creep and modern monetary theory, et cetera, I don't think it's a healthy thing. As Lee said, and others have said, this has been tested in country after country after country. It doesn't work.